Tiny stop losses are gonna destroy your trading account, and here is why. Well, I have a random example here on Euro US dollar. This is very recent price action. There is no particular reason as to why we would be entering here, but if we just follow price action on the 15-minute time frame, let's say, here we have a break of structure and we would be expecting for price to come back and retest one of these order blocks, let's say right here. Let's highlight those two order blocks that you see right here. I see that a lot of people out there are advocating those very tiny stop losses of 1 or 2 pips or even lower. Ridiculous things have come into my awareness, such as stop loss of 0.3 pips or 0.5 pips, which is absolutely ridiculous. And here is why. At the beginning, those things might seem very attractive to you. And this is exactly the reason why I stopped trading in lower time frames such as the 15-second or the 5-second time frames. The first reason is that you lose realistic expectations out of trading. When, for example, let's go down to the 1-minute chart and then I will explain why this thing is gonna make you lose money in the long run. Let me just play out this whole movement, such as we have seen right here, and I will go a little bit back in time. Let's say that I go back here. So those people who are advocating tiny stop losses for whatever reason, and remember this now is the 1-minute time frame, which is a playable time frame. If we would have been on the 15-second time frame right here, then we would be having, let's say, a stop loss of 0.7 pips or whatever. You would be able to see a whole lot of price action within the 15-second time frame or the 5-second time frame. So when those traders go ahead and show you this thing, let's say that they target right here, and they are telling you that you are getting a 70-1, a 60-1 reward to risk, then in your mind you say that yeah, it is totally fine. So if I go ahead and lose one trade here, one here and one here, and another one here, then I'm gonna get a 60-1 reward to risk. First of all, you have to realize that in order to hit such trade, you have to lose way more than 5 or 6 trades in a row, because of the fact that you're gonna be winning, let's say, only 15% of the time. Then you will have eventually to let this whole thing run without closing any partial profits. And how many of you would have been able, if they would have taken, let's say, 15 losses before and 15 losses in a row, in the best case scenario that you enter such trade and you get it from the top of it from the beginning, how many of you wouldn't be closing partials when they see the first reaction here? So you would be closing your first partials at 19-1 reward to risk. And it sounds good because you say, okay, I lost 12, I win 70% at 19-1. Okay, let's check this out. 70% you close, let's say, at 20-1. Let's go and do the math. 0.7 times 20 does a 14%. So theoretically you have made a 14%. But what did we say earlier on? You have lost 14 trades in a row. So you might be saying everything is fine now, I am at break even and I'm gonna let the rest of it make my profit. Are you very sure about that? Because I'm gonna bring you in tip number 2. When you are consistently placing an 1 pip stop loss, let's say that you want to be risking $100 as an example. This means that you have to open a position with 10 standard lots, because 1 pip with 10 standard lots would have been €100. A conservative broker's commission would be $7 per lot random. This means for the 10 standard lots that you have placed, you will be spending, let's say, dollars and $70 per trade. Very good. You are spending $70 per trade in commissions to your broker. And now you have lost, let's say, 12 trades before you have entered your one winning trade. And let's go ahead and do the math. 12 times 70 does 840. Very nice. 840. So here you have closed 70%, let's say, on your 13th winning trade, and you are already still at minus $840 even though statistically you have broken even. And this is without calculating the commission for the 13th trade. So this number would be even higher. 13 times 70 equals 910. This would be way more realistic. Believe me, I have tried it. You will get extremely huge wins. If you get them at the beginning, everything is fine. When you get to the losers, the commissions are gonna absolutely obliterate you. And let's say that the rest of the position, you have 30% open for the rest of your position and you gain another 40% because you leave this one run until 60% theoretically. So 0.3 times 40, you have made another 12%. Since you have been risking 100 euros per trade, 12% will do 1,200. Guess what? You have lost all of this money in commissions. So now you have to do minus 910. And this is the amount of money that you have made, $290 with your past 13 trades if you are doing everything properly, because you're gonna be entering on the very small time frames on losing trades. Believe it or not, you will be seeing patterns here, lose, then you're gonna lose here, then here again, then here, and probably you have already lost a bunch of trades beforehand. Now let's come to the conclusion. Is it impossible for somebody who is trading with very, very tiny stop losses to succeed in forex trading or in crypto trading? It is not impossible. And if you have a very, very large capital and you are risking, let's say, 0.2% or even 0.1% of your whole bankroll per trade, then absolutely this thing in the long term is going to make you money. But let's be absolutely honest, you are missing the larger picture because this is likely to make you engage into gambling activities. You will hit one of those and you think this is it. Well, the truth is that this is not it, because with conservative entries here, let's say you would be losing only this trade, let's say as an example, and here you would have entered yet another trade and you would have won a 12-to-1 reward to risk. So an 11% win with these two trades, one losing and one winning. And if you would have closed partials in the way, let's say that you would have won an 8% in total from these two trades, which is absolutely better than taking the 60-to-1 reward to risk by closing partials at the 20-to-1 reward to risk. It is just that you don't like to see the bigger picture and you're very absorbed into very high risks to rewards and other fancy stuff like that. Forget about the fancy stuff. Be realistic in your trading. For 99% of you out there, those tiny stop losses are not gonna make you money, they are gonna make you lose money and they are gonna make you engage into gambling activities. Because when price will throw you out again and again, and then you give up this one trade, and then if you would have entered the 10th time, this would have run 100-to-1. Imagine the psychological effect that this would be having on you, and I'm pretty sure nobody of you would be keeping the 0.1% rule with these strategies. You would be risking way more, your account would be down, let's say 10-12%, and then you lost the 100-to-1 opportunity, and then you get into another losing streak, and it is a never-ending circle. Break the circle. Start being realistic about your trading. I highly advise that you join my premium Discord server, either by clicking on the link down in the description or the pinned link in the comment section. I have very robust rules for you for how to enter trades and how to exit trades. We have realistic stop losses and realistic expectations from trading. Furthermore, I update my outlooks on a daily basis, and then you can also see if what I have called out played out or did not play out. And of course, you can request any type of analysis from me for any currency pair or even for cryptocurrencies. Be sure that you smash the like button and you subscribe to my YouTube channel, because you don't wanna be missing any of the free educational content. This is gonna do it for today. Thank you all for watching. Until next time.